Hi, and welcome to our Funded Trader interview series. Our guest today is Tymofii from Ukraine, who made $12,000 profits on his $50,000 account. Are you interested in how he managed it? Stay with us to hear his story. If you are interested in another success story like this, click here.
In trading, my journey with trading began around a little over a year ago in my last year of high school. Surprisingly, my first experience was actually good, and I managed to turn what I had back then, $400 into $2,000, which was a really big thing for me back then. And it almost blew my mind. I couldn't believe that this was possible, that there are people that are doing this for a living. So it really plagued my mind. And I was supposed to be studying for my last year exams. I was studying for my A-levels, and I couldn't do it because I've had this whole new revelation that money can be made in a different way, that perhaps I had this uncertainty whether I wanted to go to university, what did I want to do with my future. And this really has shown me a different path, and I've decided that I wanted to attempt it. So I carried on with trading after the initial success, and as it would happen to almost anybody else who would start, I lost it all, which was very downbeating. It was hard to handle, but I stuck with it because I thought there are people who are doing this successfully, and if there are others, why couldn't I do it? So I stuck with it. I began studying. Whenever I had free time from school and my other activities, I would sit down in front of the charts, listen to people on YouTube, study. I think what really helped me is just seeing that there are people who can do it, and knowing that if someone can do it, I can too. So I kept going with it. And around August, before August, I was practicing with a demo account. And as you said, I purchased a $10,000 trial with you guys. I couldn't decide at first which prop firm I wanted to go with, but the reason I chose you is because I saw you were able to retry just as long as you stay in profit. So before I started a demo account with you, I saw that I'm consistently break even. So I thought, why not start trying on a real challenge? So I took the 10,000, and I was very, very close. I believe I made 5 or 6%. And then the emotions got involved because I got really excited about being able to pass it. And I believe I went over the drawdown, the daily drawdown, because I over leveraged. So that was my first experience. But I quickly realized that this was actually a success because I could see I almost did it. I could see I've improved a lot. So I took another one. I believed it was a 50,000 or 25,000. I failed that one as well. And I believe I failed around 3
I just counted
challenges
your
with you guys.
Retries. You had 5 free retries. And
yes, exactly. So
it's really good to see that you have never given up, and in the free retries you could get to the funded. So really good you're touching on that. Sorry to interrupting you. Please continue.
No, it's okay. I think that's the really good thing. Also, the thing that I didn't utilize, but I think maybe that'll be useful in the future, is that with the challenges, you have not only do you get free retries in phase 1, but also in phase 2, which I think is really useful because you've already passed phase 1, and you wouldn't want to go back to passing it again. So let's say you didn't meet the trading objectives in phase 2. I think that's really useful that you can just start from where you left it off, and you're closer to getting funded. So I was really appreciating of this. And just, I think having those 5 months of each month being profitable, perhaps not meeting the 8% objective, but just being profitable really gave me the confidence when it finally came to the real funds that I can make some profit. It didn't have to be 5-10% or like this month 12,000 with a 50,000 account, which I believe is around 25% return. It didn't have to be that. Just making 4% a month would be, even 2% a month would be really good for me. So having the confidence of being able to make small profit consistently really helped when it came to live funding. Right now, I'm mainly trading Forex, metals, and S&P 500, so indices.
You know, Tymofii, you are our first Ukraine trader we are getting to interview for. And can you touch on the current geopolitical tension going between Russia and Ukraine? How does that affect your trading and your day-to-day life?
So actually, the first experience with trading was after the war has started. And I think what pushed me, it was before. So I've turned the 400 to 2000 before the war has started. But what made me stick with it and what made me, keep trying is the fact that the war broke out, and obviously my family's situation, my own future, everything becomes a lot more uncertain, a lot more unstable, and you just want something. You want to know that in the future something is going to be all right, and trading is a really convenient way to make money because you're not dependent on your location. You're not dependent on the current circumstances in your country or having employment or economical stability, things like that. So it was just a really convenient way to help me to secure my future, to secure the future of my family, where something bad to happen, or if my family needed something.
Well, I'm happy to hear that you have a positive impact from True Forex funds, as we can provide you with accounts and you can trade with us and benefit from prop firm trading. I'm really good that you are taking advantage of prop firms and about True Forex funds and trading with us. Can you touch on your charting analysis? Like, are you a technical or fundamental trader mostly? What type of tools do you use on a day-to-day basis? And how do you get to the assumption of locking in a profitable trade?
Okay, so I probably begin with the fundamental side. Analyzing interest rates, seeing what news are about to come for the next week, just understanding different factors that drive the market. And that just gives me more of a long-term bias of whether I believe a certain index is overpriced and it should go down, or whether I believe that metals are going to keep going down as a safe haven, things like that, or what's going to happen to the dollar. And that gives me the long-term directional bias. And then what I use is I go to the markets, I go to the charts, and I just start with a higher time frame, and I look at the market structure, I look at potential points of interest, and I just trade with a trend. So and what I'll do is I'll begin at the higher time frame, look at the weekly, and I'll come down slowly to the 1 hour charts, and then to when I'm trading intraday, I'll just wait for the key times of the day, New York open, London open, so the times of the day when the volume is a lot higher, when there is more volatility. And I would use the market structure, potential breaks in market structure, to put in my entries at those volatile times with a higher time frame flow. So for example, if I believe this week is going to be an up week and we're on Tuesday, knowing the fractal nature of the market, I know that by Tuesday we probably have hit the low of the week that has come down quite significantly, and from here on for the rest of the week it's probably going to be going up. And let's say it's London open, and I can see that it's dropped down to collect liquidity, or following the market structure of impulsive move up and retracement. So let's say it retraced back into point of interest, and I would enter aiming for to catch the expansion of the day upwards.
Do you have a favorite pair you trade with?
Yes, so definitely it would be gold. It would definitely be gold because of the volatile moves it provides. And especially after this last week, I've been waiting for a certain setup on gold for almost 2 weeks. It's made, in the past 6 months, it's made very impulsive moves up. And the last month we've been retracing, and I've been waiting for this retracement to end, and I believe it has ended. And this week I was able to capitalize on a reversal where 3 days in a row gold has been climbing higher, and every day I just went in and I bought and I scaled my positions higher, and I managed to make that return.
Yeah, I also see from your last account, the 13K profit account, you have a 70% win rate and most of the profits are on gold. So that's really remarkable. You also trade some indices, as we discussed, US 500, German, Turkish,
Yes.
and your favorite Forex pair is Euro USD.
Yes, that is indeed. It's quite a lot, to be honest, trading all of these pairs. But when I was learning, I couldn't decide, so I stuck with all of them, and I just kept going, and I found some success in all of them. And to be fair, to this day, I'm trading all three, although sometimes I'll trade one over the other. For example, I wouldn't have the feel of what's going on in the Forex market. I wouldn't know the direction of the index of the dollar, so I would just retrace to the S&P and trade the indices. Or if I don't get the feel of what's going on in the indices, I'll just move a little bit over to the metals, trade the metals for a while. So I think that's quite useful, being a little bit versatile, because not all markets always provide the moves, you know. So it can be very, very useful, especially for people that rely on trading as a source of income, or want to be trading all the time, because there is this aspect, you know, even over the weekends, I get quite hungry for trading. When it comes Monday, I'm already excited to open the chart, see what's new. So I wouldn't be able to wait for weeks without trading. Let's say if the US 500 is in consolidation and the conditions are not right for me to take the trade, I just wouldn't be able to wait. So I've decided to go with a few pairs and try and utilize them all in my strategy.
And that's good. You have an advantage or an edge over the market, because yield goes up, gold goes down. So when market ranging, you're going to get into a trend on another pair, so you don't waste time. That's really good to know.
Exactly.
Can we turn now to the charts about how you analyze on a day-to-day basis?
Yes.
If you have any questions or feedback you want to leave in the comment section below, go ahead, and don't forget to hit the like button and subscribe to our channel.
So I'd always open up, the first thing I would open up is the dollar index, because the direction of dollar is quite important. Everything we trade in the markets is against the dollar, whether it's gold, indices, crypto, other Forex pairs. So to open up the dollar, I would go on the weekly chart, and my charts are naked. The only thing I utilize are fractals to see the important swing points, and as well on intraday charts I analyze. I utilize market. So another indicator I have up there is just a session indicator. So it says whether it's a Tokyo session, London session, or a New York session. Beginning of 2021 in May, we've been in an uptrend, having explosive moves up and little retracements. And but recently, since October, it has been a reversal, because you can see that there are important swing points, important market structure which has been broken to the downside. So now, as for the dollar, I'm no longer looking for moves up. I'm looking for moves down or consolidation. So you can see when it broke the structure to the upside, it only did so with a tiny wick. So it can't really be considered a break of structure. It's more of a liquidity hunt. And I believe right now we're more in a consolidation, and we're going to continue downward. And I got this bias from the interest rate hikes, from the overall economic situation. So it's believed, it's widely accepted in the markets that the Federal Reserve is no longer going to be raising rates, which is obviously going to be detrimental to the strength of the dollar. This move right here is a consolidation, and we're right now in the upper end of it. So every day going into the market from the next week, I'll be looking for this to go down. So after opening my DXY charts and looking at the dollar, I analyze all the other pairs and obviously knowing that the dollar is going down, I'm allowing myself to consider other pairs to be going up, and I have a bias. So, for example, what I did this week, the past week when I made the returns, is with gold, you can see that it's been on a very explosive move up since October as well. So when dollar has reversed and started going down, gold has also ended its trending down path and reversed and starting going up. So you can clearly see the reverse correlation of dollar and gold. And after these explosive moves up, you can see there was a small retracement and it carries on upwards. So when I saw that we've reached all-time highs back in May, I expected some sort of retracement, especially because when we look at the daily chart in the gold, you can see that there has been a trend line building up here for quite a while. It's a channel, so obviously there was a lot of stop losses. There was lots of liquidity in this market, and the market really just can't keep moving up without the volume, without the orders it needs. So the market never moves in a straight line. It has a trend, but it always has to retrace to grab more orders, to allow the people to enter new orders, to allow the people who've already exited their longs, took profit, to re-enter again. So I saw all of this liquidity, I saw all of this, I saw this trend line, and I understood that there needs to be some sort of retracement before we can carry on higher. So I looked at the weekly chart for my potential points of interest, and I identified my points of interest as this candle here. It's a very large candle. You can see I have the volume indicator below as well. And the week starting the 13th of March has been the largest move up in gold as well, and it was with a huge volume. So I knew it would retrace back into it. There would be some sort of reaction, and there would be a potential reversal if it coincides with dollar going down again. So when it traded into that weekly candle on Tuesday, 30th of May, I went to intraday charts, hourly, and you can look at the market structure on that day here, 30th. So what I really saw was that in Tokyo session, in the Asian session, it has went up a little bit and retraced back down, finally hitting my point of interest. And when it's done that, I woke up around here at so this is New York time. I'm 7 hours ahead of New York time, so I woke up at 7 o'clock in the morning and I started looking at this chart. I saw it finally went to my point of interest, and I started looking for potential reversal, for potential structure shift when it would start going from a downward trend to an upward. And when I saw it here reverse, so you can see that the market structure is clearly bearish. So it's impulsive move down, retracement, impulsive move down. But then here it all changes. When London opens up, London session begins, you can see that the impulsive moves are now up. It's very, very impulsive moves with larger volume, and it's now in my point of interest. So I decided to scale in. I believe my first entrance was right here, when it has retraced into this original little consolidation here from which the move has started. It has retraced to where the move has started. I've entered here. I saw an explosive move up, and I just kept building my position. And I managed to hold this position all the way until we've reached this high, breaking over here, 1957. It's been a very large move, and I've been very happy that I've been able to capitalize it. And it gave me the confidence in my analysis, because you can clearly see this is a very big day up. It gave me confidence in my analysis. This could be it. This could be the reversal that I've been waiting for. So I just kept going with it. And every day when it was retracing, I believe on the same day in a New York session when it retraced back in here. If you open a higher time frame chart, you could see how impulsive this move is and how big it was, and that just really gave me the confidence for the next 3 days to be going in the market and looking for those longs. So on each retracement, I kept building my position, and finally on Thursday, I've closed all of my positions when it took out this high, and it broke higher. And as we can see on Friday, it's broken a lot lower. It's going down a lot, but I don't believe that it necessarily means that it's the end of the move, or that's not the reversal. I'm gonna wait and see on Monday how it reacts from this original consolidation, because as you can see, there is quite a lot of volume over here. Quite a lot of orders have been built up in this sort of area. Lots of people have been entering the market, and it's now retraced back to it. But I believe that after such an impulsive move up, lots of people who've been shorting from this area are now going to be closing their positions, which means they'll be buying. And lots of people who didn't capitalize on all of this move up could now be interested in maybe entering here, meaning that I'm expecting the gold to keep going higher. But I'm not going to take any trades until I see a confirmation in a lower time frame. So I'll be going, when the market opens on Monday, I'll be looking at this, and clearly you can see that the whole of Friday it's been impulsive moves down, and I'll be waiting for some sort of indication that the move down has ended and we're now reversing again to carry on higher. And the way I would know is when the market structure breaks, looking at these fractals, when the movement is going to be impulsive upwards and small retracements down, impulsive upwards, small retracements down.
Good to hear how advanced your Forex lingo and the way you talk about charts.
It's taken a long time, and hours of content watched on YouTube, and it's sort of at the back of your head. Even when you're trading, I can hear my thoughts, and I know what other people would have said about it, and it really is helpful. It helps with holding the trades, just knowing and having experience, and seeing some initial profit. And you want that profit bigger, but sometimes you're scared that that's gonna lose it, that you're gonna lose what you already have. But just the experience allows you to hold those trades for longer and capitalize on the entire move.
What is your overall experience about True Forex Fund so far?
It's definitely been positive. It's been very positive. It's I've started with you. I didn't feel the need to ever try anyone else, because everything has been working to the expectations I've had, and even better. I think the support really impressed me. I've had a couple of questions. When I first passed the funded account, I was quite worried. I was quite worried about the first withdrawal. It's all it's big steps, and they're quite nervous. I was quite nervous going through it. So sending messages to the support has been really pleasurable because of how quick the responses are. And that really shows that you care about your customers rather than just having a business model which doesn't involve customer satisfaction.
Yeah, I appreciate we are keen on working fast, efficiently, and getting all answers on time, getting the payouts on time, and making our customers, our traders happy as they are.
Yeah. And there are also just lots of nice features that I enjoy. Leaderboard, being able to see the payouts of other people. The dashboard is very nice. The certificates. It's just an overall nice experience. You will definitely learn faster by just paying. Anyone can afford a $10,000 account. I believe it's only $50 or $70. And but the experience, the way it will accelerate your journey towards success is going to be huge.
Any last words you want to tell us or share to our viewers about your experience, your trading or trading with True Forex funds?
I feel like what I'd want to share with other people is that trading is a very satisfactory activity, because what it does is it really makes you work on yourself. If you want to be successful, you have to self-analyze, you have to change your habits, You have to see what you do right, what you do wrong. It changes you as a person. I truly believe it does. It makes you disciplined. You cannot find success in this market if you stay the same person as when you came in, when you only started on this journey. So I would say is people who aspire to try, they really should. There's definitely, but they should do it with good risk management. They should not use their own funds, all of the savings they have. I believe people should be starting out on a demo account, practicing there, and then I believe the most logical step from there is to try a challenge, to go with the challenge with a prop firm, because I believe the service they provide is incredible for people who know what they are doing and who already have some hands-on experience. The ability to be able to only risk a couple of hundreds of dollars, and eventually by showing their expertise being able to come out with thousands of dollars in profit, I believe that's amazing. So I would say definitely don't risk your own money. Most people don't have the sort of funds it takes to make a living. Realistically, you can only make anywhere between 2 to 5% consistently over the years. You know, it's impossible to make 20-40% returns each month, and no one can do that. So you just can't really make a living on $10,000 or $20,000 if you're doing those modest returns. But what prop firms allow you is to have $200,000, $400,000 as with true Forex funds, and making 2 or 5% on that is a very good living, and is definitely worth it.
If you enjoyed this video and found it helpful, be sure to hit the like button and leave your feedback in the comments below. For more success stories that can help you become a better trader, click here. If you're interested in our educational content, click here. And of course, if you don't want to miss out on any new videos, don't forget to subscribe here. See you in our next video.